We're going to be talking about SBI Card. Now, this has been a stock which is very much hogging the limelight. Despite how well the market has performed this year, it's a stock which is up only about 5% year to date. It's down about 16%. In fact, if you look at the last 6 months, card spends have been bouncing back. Is UPI a big threat? Can credit cards survive fintech? Will cards have to reinvent as well? That and more we're going to be discussing now with the top management of SBI Cards, the Managing Director and CEO, Mr. Rama Mohan Rao Amara, joining us live right here on the channel. Thank you so much for your time. Are there clear signs of volumes and spend increasing on credit cards, and that too at a time when we're wondering, will the credit card survive fintech revolution?
Post second wave of pandemic, we have seen a good surge in both new account sourcing as well as the spends. If you look at our Q2 performance, we clocked more than 9.5 lakh new accounts in Q2. In fact, our card base increased from 12 million to 12.5 million. At the same time, the industry a kind of new issuance has also got a kind of boost with a very aggressive play from the existing players. We have seen like almost industry adding 1 million cards both in September and October. So that way it has been a very good run so far. At SBI Card, we have been clocking more than 300,000 cards per month, which we always stated that we would like to maintain that consistent run rate. So coming to the spends, with the bounce back in the consumer confidence, consumer spends, we have seen a very positive impact on the spends, not only for SBI Card, but across the industry. Q2 spends have been the best for SBI Card at 43,000 crores, which is almost 47% year-on-year growth. And sequentially also, it is much better than the previous quarter. So it has been aided by with the gradual opening up of all the places and a kind of improvement in the vaccination coverage. We have seen the point of sale across the categories has come back very strongly. We have seen again the festive robustness is still continuing in October. Data is already there in the public domain. Credit card spends for the industry crossed 1 trillion mark, which is like a record of sorts. At SBI Card, we have also been the beneficiary, as our whatever campaigns we have launched and whatever festive offers we made, they found a connect with the customers, and we were able to record very robust spends.
Okay, so then let's build on that. What are the new product offerings we can expect from SBI Card, and how exactly are we seeing tech-enabled products?
We have been, last 2 years, we have been adding to the product bouquet. Particularly, we have been focusing on augmenting the product bouquet in super premium segment. In the early part of the year, we launched RM card, which is by invitation card, and which received a lot of attention. It has gained a lot of traction in terms of the spend per card. We also, kind of as part of co-branding partnerships, we partnered with Fab India and issued 2 variants. One is a basic, another is a premium. So this effort is on. I mean, we always look for opportunities to partner and augment the product bouquet. When it comes to technology, we have been a kind of believer in technology. We always pushed for a digital journey across the life cycle of the customer, whether it is a new card issuance or whether it is collections. We try to cover the entire life cycle of the customer. So when it comes to sourcing new accounts, we use leverage our digital assets, whether it is a website, whether it is a mobile app, whether it is online partnerships, what we have with various partners. And we even leverage YONO of a parent bank in terms of sourcing the new customers. This has actually helped us in ramping up the volumes despite increase in the competition. When it comes to engagement with the customer, we have a complete digital suite in terms of servicing the customers. In fact, 65% of our cross-sell and upsell volumes actually come from the digital channels. And of course, we do have a very extensive data lake supported by advanced analytics and machine learning models, which help us in terms of making a right offer to the customer at the right time. And we have been improving on this in this journey.
Right.
Mr. Rao, RBI said that it's going to be releasing a discussion paper on various charges of all kinds of digital transactions. How is it that you're viewing this, and do you expect a sizable reduction then in the MDR?
Yeah, this is, as of now, they talked about placing a discussion paper in the public domain. And only when the paper is released, we will know the broad contours of the changes what we're talking. But it's a fact they did talk about a whole host of digital options, including credit cards. But overall, I mean, if you ask me without even knowing the contours of the changes they're proposing, but overall, as the move is aimed at actually pushing the digital transaction adoption, we feel it is positive for the credit card industry and particularly for SBI Card, as it actually positively impacts our sourcing and spends. But however, I want to draw attention to one fact. Credit card is very different from other payment enablers, whether it is UPI or wallets. In the latter case, they will be using their money in deposit accounts, whereas in case of credit card, we extend a line of credit with the interest-free period from 45 days to 50 days. And as an issuer, we bear the credit cost. So this differential feature was always taken into account whenever there was a revisiting of the MDR charges in the past. And we hope, again, this will be taken into account this time around also.
So how is it that you plan to protect your margins if indeed there is a case of change in MDR? And what really is the trajectory that you expect going forward?
As I said, the contours of changes are not known. We don't know what are the exact changes they will propose eventually. But definitely there will be an opportunity to engage with the regulator at the material time. But if you look at our income streams or our revenue base is well diversified. In fact, if you look at in terms of share or a contribution from a different segment, they're all well spread out. So we don't have any concentration as such. But while it will be premature to talk about like what will be the impact, we do have options. Ultimately, the current value proposition, the free credit period, the rewards, the kind of sharing arrangement what we have with the networks, etc., is structured around the current level of MDR. Any significant change in the MDR will obviously will force us to relook at it. I can't comment on the extent of impact without even that information being available in the domain, public domain.
Okay, Mr. Rao, great to have you on the show. Thank you so much.